Welcome to the Deep Dive. We're here to give you the essential insights, cutting through the noise. Today, we're really digging into the 9-month 2025 financials for Eczacıbaşı Yatırım Holding, or WASH. You probably know it better as EYH, or maybe by its ticker, ECZZYT. This is definitely one for you if you're an individual investor trying to understand your holding setups in Turkey. And hey, if you get value from this, please do like, subscribe, maybe share with someone who'd find it useful.
Absolutely. So first things first, let's get a handle on the company itself, EYH. It's based in Istanbul, Canyon Office Tower. And its whole deal is purely an investment holding company, which means, and this is kind of interesting, 0 employees on the payroll. All the management, the operational stuff. That's contracted out, reinforces that its core job is just managing capital.
Okay, 0 payroll. That's distinct. And what about who owns it? Looks pretty stable.
Oh, extremely stable. Eczacıbaşı, holding Esh, the parent, holds a massive stake, 81.57%. So the public float, what's available for trading, is only about 18.34%. Not a lot of churn there.
Right. And governance. I see 6 board members listed.
Yep, 6 members, 2 are independent, which is standard practice. And notably, there's one named woman board member, Simhan Savaşan Başaran. She's involved in key committees too.
Good to note. What about compensation for the board? Specifically those independent directors and Ms. Başaran.
Yes, the Huzur Hakat. That total figure went up slightly. For the first 9 months of 2025, it was 1.898 million Turkish lira. That compares to 1.790 million lira for the same period in 2024 once you adjust for inflation. So a modest increase.
Okay, structure clear. Stable ownership, external management. Now let's follow the money. Where does EYH's performance actually come from?
Well, not from its own, day-to-day operations, because there aren't many. It's all about its investments. The big ones, accounted for using the equity method, are Eczacıbaşı. They own 30.62% of that, and Intima İnşaat, where they hold 46.21%.
And Eczacıbaşı. The name suggests pharma, but you mentioned it's more than that.
Oh, yeah, way more. EIS is heavily into real estate now. Think Canyon AVM, the shopping mall and office complex. That's a major asset. Plus, they're driving that big Ayaza Sender urban transformation project. So real estate development is key there. And here's the really fascinating part. ES's net profit almost doubled in the first 9 months of 2025. Hit 2.56 billion lira.
Doubled? Wow.
Yeah, doubled. Up from 1.22 billion the year before. And get this, their actual revenue dropped.
Okay, hold on. EIS revenue drops, but profit doubles. And that flows up to EYH. Then let's explain the kind of confusing headline numbers for EYH itself then. Because EYH's operating profit actually fell quite a bit. It went from 562.7 million lira down to 390.2 million. So operating profit down. But then the net income for EYH just rocketed up to 987.1 million lira from 661.8 million. How does that square?
Oh, it seems like a paradox, right? But it makes perfect sense when you remember EYH is just a holding shell in operational terms. The drop in operating profit might be minor fluctuations in management fees or something small within EYH itself, but the massive jump in net income, that's almost entirely down to one line item, share of profits of equity accounted investments. That line nearly doubled, 796.2 million lira, compared to 406.4 million the year before. So basically, the huge success of ERS, driven by those real estate assets, flows directly onto EYH's bottom line via accounting. It bypasses their own weak operating result.
Got it. So the holding company acts like an amplifier for the subsidiary profits, which means the health of those subsidiaries is everything. Speaking of health, how does EYH look financially overall? Balance sheet strength?
Rock solid. Seriously conservative. Their total debt to total assets ratio is tiny, just 0.02. They have very little debt. And they're actually sitting on a significant net cash position, about 790 million lira in cash and equivalents.
Very strong. Although I did notice one metric that seemed to fluctuate a lot, the current ratio. It was a huge 103.59 at the end of 2024, but dropped to 41.32 in September 2025. Still incredibly high, but why such a big change?
Yeah, 41 is still massive liquidity. A drop that sharp, when you're starting from such a high base, often points to a large cash outflow. Given their history and the timing, the most likely explanation is that hefty dividend payment they made back in May 2025.
The dividend payout. Makes sense.
Exactly. But even after that, look at the raw numbers. 790 million lira in current assets versus only 19.1 million in short-term liabilities. Liquidity is absolutely not an issue.
And that financial strength, coupled with the subsidiary profits, flows through to shareholders, right?
Directly. Earnings per share saw really nice growth. It climbed to 9.4 LO lira for the 9 months, up from 6.3 lira the previous year. And you mentioned that dividend, it was substantial. 700 million lira paid out in total in May 2025. That reflects a gross ratio of over 660% based on 2024's performance. They have a strong track record of returning cash to shareholders.
So let's wrap this up. For you, the investor, what's the key takeaway on EYH?
I think, in a nutshell, you're not investing in EYH's operational capabilities because it doesn't really have any significant ones. You're investing in the amplified success and the financial strength that comes directly from its core holdings, especially EGRES and its real estate portfolio. The value flows through EYH.
Okay, so here's a final thought to leave you with, something to mull over. We see these massive stable profits coming from EYS, driven by things like Canyon and the New Center project, long-term, high-value assets. Given that foundation, how much future growth, future dividend potential is sort of already baked into EYH's value through these equity stakes, almost regardless of day-to-day market noise, something to consider?